Also keep in mind that we have something called corporations. A corporation is chartered by the state in which it's headquartered, whatever state that you're in. It's considered by law to be a unique entity, separate and apart of those who own it. So what does this mean? This means that a corporation can be taxed. It means that it can be sued. It can enter into a contractual agreement. The owners of a corporation essentially are its shareholders. The shareholders elect a board of directors to oversee the major policies and decisions. The corporation has a life of its own and does not dissolve when ownership changes. Shareholders have limited liability for the corporation's debts or judgments against the corporation. So that's one of its advantages. Secondly, generally, shareholders can be held accountable for the investment in stock of the company. Note, however, that officers can be held personally liable for their actions, such as the failure to withhold and pay employment taxes. Corporations can raise additional funds through the sale of stock, so that's definitely one of its benefits in comparison to a proprietorship and a partnership. A corporation may deduct the cost of benefits it provides to officers and employees, can elect S corporation status if certain requirements are met, and this election enables companies to be taxed similar to a partnership. So, the disadvantage of a corporation. The process of incorporation requires more time and money than other forms of organization. Corporations are monitored by federal, state, and some local agencies, and as a result may have more paperwork to comply with regulations. Incorporating may result in higher overall taxes. Dividends paid to shareholders are not deductible from business income. Thus, this income can be taxed twice. So that's where we get the term double taxation. Right? But there's also another form of corporation instead of just being a C corporation. You can be an S corporation within the corporate guidelines. So the S corporation is a tax election only. This election enables the shareholder to treat the earnings and profits as distributions and have them pass through directly to their personal tax return. The catch here is the shareholder. If working for the company and there is a profit, they must pay his or herself wages, and it must meet the standards of reasonable compensation. This can vary by geographical region as well as occupation, but the basic rule is to pay yourself what you would have to pay someone to do your job, as long as there is enough profit. If you do this, the IRS can reclassify all of the earnings and profits as wages, and you will be liable for all your payroll taxes on the total amount. The LLC is a relatively new type of hybrid business structure that is now permissible in most states under the corporate structure. It is designed to mainly provide limited liability features of a corporation and the tax efficiencies and operational flexibility of a partnership. The formation of such is more complex and formal than that of a general partnership. The owners are members, and the duration of the LLC usually determined when the organization papers are filed. The time limit can be continued if desired by a vote of the members at the time of expiration. LLCs must not have more than 2 of the 4 characteristics that define corporations. Limited liability to the extent of assets, continuity of life, centralization of management, and free transferability of ownership interests. And when we talk about the federal tax forms for the LLC, it's going to be taxed as a partnership in most cases. And corporate forms must be used if there are more than 2 of the 4 corporate characteristics that I just described. In summary, deciding the form of ownership that best suits your business venture should be given careful consideration. Use your key advisors to assist you in the process. Why? Because there's special characteristics of the corporate form. They're going to influence of state corporate law. You're going to be able to use the capital stock or share system. And the development of a variety of ownership interests can all be categorized within those 3 primary forms of business.